All right, I'm going to try to talk to you today about Makerdao. New favorite, not favorite per se, but this is a coin. This is the MKR token. Is something I think I can start investing in. Let me get to it. Now, here's the thing. This thing is confusing. There's a great piece on it. It's called Makerdao for Dummies. And it's funny, the first sentence they said, you know, they called it Makerdao for Dummies, but they're kidding. It's not for dummies. It's really hard. I literally read this thing 3 times. On the 3rd time, I was like, okay, now I'm getting it. Like, first time I read it, I'm like, ah. And then I read it again, and I was like, the 3rd time, I was like, okay. And then I was able to study further. Really hard to get a handle on how this works, so don't feel bad if you're super confused. And as far as me explaining it in this video, I've got my notes, but still, I'm just like, I don't even know where to begin. So here's the thing, and here's how I view it. If you understand how the existing banking system works, you have the banks, they have a certain amount of collateral, and based on that, they can make loans. And if it turns out like the value of their collateral goes down and then they have a problem with liquidity, the central bank steps in to bail them out. The Makerdao system is similar in that you create loans based on an amount of collateral, and if there's a problem, the maker token steps in to bail the system out. So if you're an owner of the maker token, you're sort of like the central bank, which I like that idea. And let me explain how it works, because it's not like the current system at all. But understanding that part might help. So there's been a lot of talk. I don't like the term stable coins. It kind of annoys me. When people say stable coin, what they really mean is a dollar pegged coin, that the value of that token is meant to follow the value of the dollar, and the dollar is, is stable according to prices in the market. Now, but you can also peg to, you could peg to a euro, you could peg to other currencies, you could peg to oil, you could peg to Apple stock. So in most of the other dollar pegged coins are done, whether it's the IBM or Tether or there's many others, they take a certain amount of dollars and hold it and create an equal amount of tokens. And so it should match the value because it's a one-to-one exchange. They may even allow you to exchange for it. That's how those work. Makerdao has a system, and their DAI token, D-A-I, is a dollar peg token, and it works differently. The way it works is this. Now, what they just started with is with Ethereum, in that you can go and you create a smart contract. Also, I'm just skipping back for a second. This thing, another way to explain it is it takes the central banking system and reduces it to smart contracts. So anyways, what you can do is you can take your Ethereum and lock it up as collateral. For every $150 value of Ethereum locked up, you could take out or create $100 of DAI, dollar token. So now the first thing you say is, well, Ethereum is very volatile. So if I put in $150 worth of Ethereum and get $100 worth of DAI, and the value of Ethereum falls by 10% tomorrow, I'm underwater, which is why you would never want to take out 100 based on your 150 collateral. Maybe you only take out 50. That means Ethereum could fall by 50% and you still have enough collateral. Because if your collateral value falls below the point it has to be, it's automatically liquidated and there's a 13% fee, and you don't want that to happen. So what I like about this is that anybody like me, I have Ethereum now sitting there doing nothing. I could go lock it up in this contract and allow me to take a low interest long-term loan. The rate was only 0.5% a year interest rate, which is ridiculously low. They're now increasing it to 2.5%, which is still a low interest loan. And it's, I believe, some of this, I don't know that I have every detail correct, but it seems to me that as long as your collateral is locked up, you can maintain your loan. So it's basically a long-term low interest loan based on assets. Now, Right now, it's just Ethereum for the DAI dollar peg. But their vision is that there will be many things you can use as collateral. The next thing they're introducing is several other coins. You'll be able to use, back it with Bitcoin, with OMG, and there's others. And eventually, they are hoping there's tokenized stocks and real estate and things that you can lock up. And they also feel they may have create other pegs. Instead of only having DAI, you could create like I said, an Apple stock peg or whatever I don't know. There'll many new other things. It's a flexible system in that way, and I love that. And I gotta say, as somebody who, some of you younger people may not have encountered this problem. When you get older, and or if you're retired, like my father, he had a business as well. He has money. He owns property, but you can't get a long-term loan, with a fixed rate. I don't know how fixed these interest rates are with Makerdao either. I mean, in other words, if you take out the contract, it's at a rate, and then if they increase the rates, it might just increase. So maybe it's not fixed rates, but it's low rates. But you can't get loans right now based on assets. It's only based on income. And I find that very annoying. Even like my father, was talking to him about it. He's got plenty of money, but if he wants to buy a house, he's got to come up with the money. He can't get a loan because he doesn't have income. But he can't pledge other collateral that he has. So I think this is kind of a cool system for the individuals who want to be able to get loans based on collateral that they have, especially for someone like me, or you may be accumulating some asset value in cryptocurrencies. Now you can use that to get loans. Now there are many other programs out there offering loans. I saw this one, Celsius, looks kind of interesting. There's various others. So my interest in this is not just to get a loan. There's many doing that. My interest in this is not the stable coins. I don't really care that much about stable coins. I think it's important for the industry, and there's many of them. I don't care. What I like is the idea of this Makerdao, so the interest rate, fees, the money that is made from these loans goes to the Maker token and accumulates there. Now, the problem is, if there's a problem, Maker then has to come and bail the system out. So by owning the Maker token, you're saying, I'm the central bank, I'm going to collect money from interest rates, and I'm also taking on the risk of having to bail out the system. But what I like, I always say, I don't want to be the first one in. I didn't want to buy Maker in January when it launched, and Ethereum price was so high. I don't know, was this going to work? Well, guess what? Ethereum's price fell. They launched right in January. So I don't know the exact chart of when they launched, but Ethereum was like at 1,400 at some point around then. And it's fallen all the way to 170, and the DAI peg held. So that tells me this system has been stress tested. I'm not saying there's not going to be more crazy market movements in the future, but clearly this system seems to work. Listen, there's risk. I'm not, but I like that. So this works. To me, it's launched, it works. And I like the idea. Now, the other reason I like it, and it might not apply to you, is I love this shit, right? I love the crypto economics and reading and how do central banks work and how does all of this work. I love it. So I want to be involved because I like this job. And when you've got the Maker token, there's a voting system to determine what should the interest rates be. And now another thing they're going to start doing is with your DAI peg, you'll be able to lock that up and earn interest. So now, if I took a loan on my Ethereum collateral and I'm paying 2.5%, but if they're paying 2% interest to the DAI holders, then Maker's only going to earn 0.5% on interest on that. And just, looking at all these numbers, trying to figure out what's the best smart contract systems to maintain this sort of decentralized banking system, I find fascinating and exciting, and here's one that works. They seem to be a leader in doing it this way. Other people are doing it other ways, and maybe someone's trying to do it similar to them, but this way they seem to be a leader. Andreessen, his organization there, AZ16 is it called, or I think it's AZ16, whatever, Andreessen's fund. They just made a big investment. They bought 6% of the Maker tokens. They want to be involved. I mean, that's a vote of approval. I like the idea that I'm on, I'm one of the people voting on this central bank. And I think this thing can grow because we've already seen, did I write down the numbers? Just the amount of collateral pegged, the amount of collateral posted of this Ethereum. So it's almost 200 million in collateral now. That's in the first 6 months. And it was up 50% in the past month. And this thing's just getting started. So they already have, so if they already have 200 million, I mean, I can see this thing being a bank with $1 billion in collateral very soon, like within a year. And then this thing can grow. I think this could be one of the biggest banks in the world within a few years. And so I like the idea that I'm the central bank of this new banking system. So for me, part of it is fun. I like that it works. And so I'll put the link in for this Makerdao for Dummies article. Try to get through that. You got to read and study this for a while. I took a few days. And, but again, I enjoy it. If this is just like not fun for you, I wouldn't even bother. And they don't want, it's not on any exchanges. That's another thing. The Maker token. DAI, they want everywhere. Like they want it to be a successful dollar-pegged coin. But the Maker token, they don't want any hype. It's hard to find it on most exchanges. I did find it on HIT BTC. It is on other coins. It's also on this Oasis DEX, which I couldn't figure out. I looked at that because that's sort of their creation. Now, there's another thing. So my other idea, so I bought a little Maker. And someone was like, well, what percentage portfolio? This is early. This thing is a lot of unknowns here. I wouldn't do more than 5% of my portfolio. My portfolio has gotten big because I got in early on Bitcoin and Stellar. So to do 5% for me is a big deal. I'm not trying to do that right now, but what I like, so I thought of this idea, well, what if I take my Ethereum or some of my Bitcoin at some point and I lock it up as collateral and use that money, and I pay a little interest to get some DAI that I use to buy the Maker token, and theoretically the interest that I'm paying and money that I'm earning, the money that I'm paying to get the loan, part of that gets paid to Maker. So now the problem is, but before I knew about the savings rate for DAI, that's a new thing they're putting in. So let's look at it this way. If I had done it 6 months ago, you put money, you lock up Ethereum, get DAI, you're paying 0.5% interest, and that 0.5% interest goes to Maker. So you use the DAI to buy Maker, and so you get your DAI, pay 0.5%, which goes to the Maker, you use that to buy the Maker. Long story short, you are getting the Maker token for free. As long as I wouldn't borrow. So, like I said, if you have $150 in collateral, to get $100 in DAI, I wouldn't take out more than even 50. I'd be nervous. I don't like risk. I don't like having to stay up at night. I don't like having to watch the charts. So, but I feel like it's an inexpensive way to get in on Maker. That's something I would look into. Now the problem is, and I haven't gotten this far, which is trying to figure out how to lock your money up in this CDP, collateralized debt position, how to lock up your Ether and eventually these other coins and get the DAI and then buy the Maker. And it's like, it is, they fully say, this needs to eventually be very easy on your phone, click, click, click. They're not there yet. It's not easy to figure out. Maybe if I take a week, I'm going to figure it out and then it's going to feel easy. But at this point, that's challenging. And so I bought a little bit. I don't know what maybe it's 1% of my portfolio now. And to buy more, I would want to try to do it by locking up some Ether or Bitcoin. Hopefully they offer it. and then and sort of buy it with the money I borrow within the system and get a little bit more. So, okay. So anyways, now as far as buying it as well, so I went to this HIT, BTC, and it's like, there's no volume on this thing. Oh, so they don't want this to be a hype coin. They don't want to be on Coinbase with Maker, because it's a governance token. It's basically, if you own the token, you're part of the voting system you're on the board of the central bank. They don't want a bunch of idiots on the board, especially early here. You know, if it's successful and later, there'll be a lot of big guys who you can't compete with. Andreessen already, you know, has, you know, 6% of all the outstanding tokens. You know, they get a few really big guys. They don't have to worry about some idiots having a big seat on the board, right? They don't want that. So you're not, it's not easy to buy. So I go to this HIT BTC and you want to buy it, and it's like, because I told somebody who, through my Instagram, he's like, well, how do I buy it? And he's like, it's not going through. And I remember, like, I go on there, I do a limit. I just, you know, they have the people buying and selling, and, you know, people, you try to, you know, you just have to go and buy it at whatever the highest offer is. There's no volume in the trading on this thing. And, you know, it's, you know, so you're paying, there's low volume, there's high spreads. You know, if you're a trader, it's expensive to get into this thing. Do not get in unless, you know, for me, this is a long term, that 5 years from now, this is one of the biggest banks in the world. Then if this becomes one of the biggest banks in the world, you'll be happy you own the Maker token, right? That's the play. I'm not trying to trade it and flip it, and I don't look at the price every day. I could care less. I mean, I don't know. We could go up and down. This is a long-term bet on that. That there's a lot of people who either have crypto and eventually other assets and want to get low-cost loans without even having to talk to a banker. You just pledge your collateral, you get your loan, and you pay it back when you want. Everything's clear, and there's no bullshit. You don't have to go to a bank, and you don't have to put on a tie. Also, this is on Ethereum. I can store the Maker token in my Ether wallet. It's an ERC20, you know, compatible thing. I like that. Okay, then there's also MKR.tools is a website that shows the statistics. You can see how many DAI tokens been created, and that's where I got the stats on the collateral. And you can see the collateral growth. I like it. Since January, it's like this. I mean, it's a little like this, a little bit of a stairway, but it's a nice trend up, and I don't see that changing at all. You know, coming out with, you know, so that's the whole thing. How much collateral is pegged? And this could be, as well, a killer app on Ethereum. Like, what's the next killer app? This type of thing, to me, could be huge. What else? Okay, that's all I have for now. There was also a podcast on Unchained. Maybe I'll try to put in some of the links of the info that I found. If this interests you, you know, do your research. Feel free to ask me questions. Shoot, I was just gonna say one more thing. I don't know, but I like it. This is fun and exciting for me, and I don't know. It is one. This is another one where I feel like we're early. I remember when I made my Stellar video and it was at $0.015, and I said we're early. If this thing works, talking big money, right? Maybe it doesn't, but I remember, you know, with the Stellar, I'm like, this thing, it's not going away. I don't think this thing's going away either, you know. So I like it. I'm gonna get in slowly, bought a little, try to do a, you know, pledge some Ethereum, and I may run into a wall. I may put up the Ethereum or read and learn more and don't like it. That's why I like to get in slow, and then I only have 1% in, so that's fine. I can get out. But as long as I keep studying and keep liking and buy a little more and a little more, before you know it, I have a decent position, and then hopefully I'm right, and I got another big winner, right? Thank you. Let me know your thoughts.